Well, if you see the fall of 6% yesterday, that was the most or the biggest fall in the last 14 months. Even volumes are pretty much strong on this counter, nearly three times its 20-day average. Now, the reason behind this fall was the fact that the US president had recently made a comment about rolling back tariffs on China to fight inflation. Now, the market is fearing that any removal of or reduction or in anti-dumping duty on HFC, that is hydrofluorocarbon, could impact the prices of HFC and does have a negative impact on the chemical margins of SRF, and thus that and hence we had seen a fall in the share price of SRF. But what the management is telling is that that HFC inclusion is still not known, and the exports quantum to US is just 11% in value terms according to the management. That is roughly around 1400 crore rupees, which also consist other specialty chemical products according to the management. Now, the management believes that the impact could come in for one gas, that is the R25 gas, which is a very small portion of the overall exports for SRF. And it also says that even if the prices of R25 gas fall by around 100 rupees, the impact on the company's EBITDA would be as low as only 40 crore rupees. That is just 1% of the FY22 EBITDA that the company had earned. Along with this, the management continued to maintain its guidance and outlook, and it also said that the volumes won't be impacted even if the anti-dumping duties have been removed on the company. Also, what we understand is that the first quarter of FY23 numbers are expected to be good because the HFC margins were pretty much strong, while the volume offtake was also pretty much strong for the company in the first quarter of FY23.